Welcome back guys to another Zero DTE video, and today Ernie's going to be talking about the trading fundamentals, so make sure you stay tuned. If you're interested in becoming a pro trader, check out the link in the description where you can find Ernie's education platform. Enjoy guys.
For everybody, the very first thing that you're doing that you'll spend virtually all your time perfecting, and that is learning how to be the best loser, controlling your risk, controlling your drawdowns, keeping your volatility of your returns in check. That is the fundamental tool that you'll be using to determine when it's the right time to increase your position size. It's really a fundamental skill. And speaking of fundamentals, that is the second thing, and that is practicing those fundamentals, which is really revolves around managing your habits, your routines. That's it. I can't think of anything that is more important. You don't have to get all bogged down in all the minutia and think that this is much more difficult than that. Of course, the strategy is built upon a great deal of math, theory, practice, experience, and how options fundamentally behave. I talk about this all the time too. What is it that you should be spending your time? How do you improve over time? You improve by improving your process, your routine. It's a continuous improvement process. Everything that we do is about routine and continually improving that routine. Keeping good notes, knowing where you are, what your baseline is, and what you're trying to achieve is super important. Like I said, those are the fundamentals, and spending a lot of time just perfecting that is really where it's at. I keep on getting a lot of questions about different situations and how do we have to be nuanced, or is there a different way that we have to look at it because of this situation or that situation? And it's simply not true. It really comes down to just one basic factor in terms of how we approach the market, and all we're doing really is constantly either expanding or contracting our exposure to risk based on the amount of volatility that's out there. The other things are pretty static, where, as I said, there's three basic edges that we're going after, and there's a fourth edge that has little to do with options, but has more to do with you as a trader, and that is developing your continuous improvement process. But the three basic edges are the change that we're trying to exploit is the change in time, the change in volatility, and the change in price. Two of those are taken care of very simply. We trade with the direction, we trade on the zero DTE, and we trade asymmetrically. The third is that volatility, and that's where I'm saying we just expand and contract. Fundamentally, it's not much more difficult than that. Now, of course, there's profit management strategy and how we actually approach and adjust our risk as we're in a trade to try to capture the maximum profit. We get in with the same kind of reasoning too. We're trying to take advantage of the most volatility that we possibly can at the most opportune time. So I guess the one thing that I'm not folding into this is volume profile, but I guess you can look at that as part of our management of price and the change in price. Yes, we are looking to go with the trend, but we're also looking within that trend how to best take advantage of it. And so that's how we use volume profile. If you've noticed that each of the three edges, the change in time, the change in price, and the change in volatility are tied to each other, which I find pretty fascinating. When you try to break it down to what it is that you're fundamentally doing, see, I find now, for me anyways, that trading this strategy is super simple. I know that as long as I stay in the game, don't draw down to any significant amount, that I will always be winning. I know that by simply trading what is in front of me, the amount of energy that the market is presenting and adjusting to that, in other words, expanding my exposure or contracting it, I'm going to optimize my ability to be able to take what the market is willing to give me. There are other things that are pretty fundamental too, that you can't force a result. You can't go in there and say, hey, I'm going to make X every day. Now, you may have an average that you come out to over time. That's fine. But you can't say that I'm going to make $1,000 every day, and that's what you're shooting for, because you don't know. You don't know what the market is going to provide for you. So it's a probabilistic game. And that's something that if you understand the probabilities and how they are distributed, it becomes a lot easier in terms of setting your expectations correctly. When your expectations are set correctly, you don't get frustrated. That's not entirely true. This is life. Every once in a while, the probabilities just seem like they have a personal vendetta against you, but it's not personal. There's no vendetta. The market knows nothing about you. That's just the way things go. Sometimes it just keeps an even keel for a long time. What is that term that says the market can do something something the longer than you can stay solvent or something. I can't, what is anybody know what that, I can't remember what it is, but there's an insightful quip like that the market will always test your resolve. But see, if you understand that it is just a probabilistic game, that if you are in the game and you're appropriately adjusting your risk and you're not losing, eventually the probabilities are going to reward you. But the only way it's going to happen is if you have that discipline, that consistency of application of the strategy.
Thanks for watching, guys. I hope you enjoyed the video, and if you did, make sure you hit that subscribe button and hit the like button below. If there's any questions that you might have for Coach Ernie, make sure you leave them in the comment section. Thanks, guys.